Picture this, a Wall Street with no humans, no shouting brokers, no ringing phones, no paper flying through the air. Instead, it's silent, except for the hum of servers running artificial intelligence algorithms. Trades are happening at lightning speed, decisions are being made in microseconds, and human emotion is completely removed. But what happens when AI takes full control of Wall Street? Will it lead to unprecedented financial gains, or will it plunge the world into chaos? Stick around, because the reality is even more shocking than you think. Wall Street has always been a symbol of power and ambition. For over a century, it has been driven by human expertise, intuition, and, let's be honest, a little bit of greed. But the rise of artificial intelligence is reshaping this iconic financial institution. AI isn't just a tool on Wall Street anymore. It's becoming the decision maker. From analyzing massive amounts of data to executing trades faster than you can blink, AI is revolutionizing finance in ways that were unimaginable just a decade ago. But what happens if AI doesn't just assist humans but replaces them entirely? What if every decision on Wall Street, every trade, every investment strategy is made by machines? Today, we'll explore the incredible potential and terrifying risks of an AI-dominated Wall Street. How would it impact the global economy, the job market, and even your personal finances? And perhaps most importantly, can we trust machines with something as volatile and unpredictable as the financial markets? Let's start with where we are today, because AI is already deeply embedded in Wall Street operations. Take Sarah, a portfolio manager at a major hedge fund. Her team uses machine learning models to predict stock prices with astonishing accuracy. These models analyze billions of data points, everything from historical trends to breaking news, at speeds no human could ever match. Thanks to AI, Sarah's fund has outperformed the market for 5 years straight. Then there's high-frequency trading. Firms use AI algorithms to execute thousands of trades in milliseconds. Imagine spotting a price discrepancy on 2 global stock exchanges and capitalizing on it before a human can even refresh their screen. That's the power of AI. Robo-advisors like Betterment and Wealthfront are another example. These AI-powered platforms manage investments for millions of people, offering tailored financial advice at a fraction of the cost of human advisors. And it's not just trading. Banks are using AI for fraud detection, scanning thousands of transactions every second to identify suspicious activity. Credit scoring models powered by AI are making lending decisions faster and, in some cases, fairer. AI is already running the show behind the scenes. But here's the question. What happens when it steps out of the shadows and takes over completely? Let's explore the benefits, because the potential is staggering. First, speed. AI can analyze data and execute trades faster than any human ever could. Imagine an algorithm processing market news, social media sentiment, and trading data from around the world, all in real time. This kind of efficiency could lead to smarter investments and higher returns. The second, precision. Humans are emotional. Fear and greed drive a lot of decisions on Wall Street, often leading to market bubbles or crashes. AI doesn't have emotions. It doesn't panic sell during a downturn or get overly optimistic during a bull run. It sticks to the data, which could make markets more stable. Third, accessibility. AI has the potential to democratize finance. Imagine a world where everyone, not just the wealthy, has access to sophisticated investment tools. A farmer in a small town could use AI to build a diversified portfolio with the same precision as a Wall Street hedge fund. Finally, AI could reduce costs. By automating complex tasks, financial firms could operate more efficiently, passing savings on to their clients. Lower fees, better tools, and faster transactions could benefit everyone. Sounds like a dream, doesn't it? But here's where things start to get complicated. While the potential benefits are exciting, the risks are equally alarming. First, let's talk about market stability, or the lack of it. Do you remember the flash crash of 2010? In just 36 minutes, the Dow Jones Industrial Average plunged nearly 1,000 points, wiping out over $1 trillion in value. The cause? Algorithms running out of control. Now imagine that same scenario with even more powerful AI. One small error in a trading algorithm could trigger a cascade of sell-offs, crashing markets worldwide in seconds. Next, there's the issue of accountability. If an AI makes a disastrous decision, say investing billions into a failing company, who takes the blame? The programmer? The financial firm? Or no one at all? AI could also increase inequality. While it has the potential to democratize finance, the most advanced algorithms will likely be controlled by the wealthiest firms and individuals. The gap between the financial elite and everyone else could grow wider than ever. And then there's the potential for manipulation. AI could be weaponized to manipulate markets, spreading false information or creating artificial demand for certain stocks. Governments, corporations, or even rogue actors could exploit this, destabilizing economies for their own gain. The stakes are high, and the risks are real. But how does all of this affect you? Whether you're an investor or not, an AI-driven Wall Street would touch your life in unexpected ways. First, let's talk about investments. If you have a retirement account, a college savings plan, or even a basic savings account, your money is likely tied to the stock market in some way. An AI-driven market could mean faster growth and more stability, but it could also mean greater volatility and higher risks. Then there's the job market. AI could replace thousands of jobs on Wall Street, from traders to analysts to customer service representatives. But it could also create new opportunities in fields like data science, cybersecurity, and AI development. Even if you're not in finance, the ripple effects would be impossible to ignore. If AI stabilizes markets, it could lead to stronger economic growth and more job creation across industries. But if it destabilizes them, the resulting recessions or depressions could impact businesses, governments, and individuals everywhere. And let's not forget the ethical questions. Would you trust a machine to decide how your pension is invested? What about determining who qualifies for a loan or mortgage? These are decisions that could shape your financial future for better or worse. So, where do we go from here? It's clear that AI will play an increasingly important role in finance. The question is not whether it will take over Wall Street, but how we will manage its rise. Regulation will be key. Governments and financial institutions must work together to create guidelines that ensure AI is used responsibly. That means preventing misuse, holding companies accountable for their algorithms, and ensuring transparency in AI-driven decisions. Education is another crucial factor. As AI becomes more prevalent, individuals need to understand how it works and how it impacts their investments. Financial literacy in the age of AI will be just as important as traditional skills like budgeting and saving. Finally, innovation must continue. While the risks are significant, the potential benefits of AI on Wall Street are too great to ignore. By addressing the challenges head-on, we can harness the power of AI to create a more equitable, efficient, and prosperous financial system. So, what happens if AI takes over Wall Street? On one hand, AI could revolutionize finance, making it faster, smarter, and more accessible than ever before. On the other, it could lead to catastrophic failures, unchecked inequality, and ethical dilemmas we're not prepared to solve. What do you think? Should we embrace AI's rise on Wall Street, or should we approach it with caution? Share your thoughts in the comments below. And if you found this video insightful, don't forget to like, subscribe, and hit the notification bell. We've got more deep dives into the future of technology, finance, and society coming soon. Next time, we'll explore what happens when artificial intelligence decides who gets hired and who doesn't. Spoiler alert, it's more complicated than you think. Thanks for watching, and we'll see you in the next one.